Another gold stock, Seabridge Gold on the TSX. There's probably an equivalent on the New York Stock Exchange. So this is in Canadian dollars. All right. I did a podcast, I think, in September or before, in 2018. And I had it start to break out. Probably embryonic move, September, right about here. Yeah, breakout of this pattern here. Smaller base, but remember always that monthly defined resistance. You have to respect it. And especially in this formation, tighter and tighter, but every time, first time here, you're just starting to define it. So you don't quite know right here if what that's going to be. So you know it later. So whenever, let's see, years later, oh, all right, this was important resistance. Then a couple of years later, oh, look at that, those wicks coming in, not able to stay above. Remember, that's intraday noise or intra-week, intra-time frame noise. There was price action above that monthly defined breakout line. Did not quite make it. Here is some more monthly defined resistance. Broke out of it right here. So you're starting to build up, giving you targets, or at least edging upwards towards higher resistance on the way. When it pulls back down, and if that level doesn't hold, it hasn't been tested many times, just once right there. Not very, very meaningful. If that doesn't hold, whatever your breakout was, and then it goes back down, then you're happy you didn't go in. If you would have waited always for the ultimate confirmation, which is this monthly important defined resistance, then you don't get trapped. Right here off the base. We're probably going to see more details on the weekly. So always that weight of evidence. Make sure everything's in your favor, especially the higher time frame. Doesn't mean it's not going to go back up, but now you're below 12-month moving average. That could make it flat. That could start making it decline. And then you could just be ranging for a whole long time, while instead of having your money logged there, you could have had your money logged into something that was actually breaking out above a horizontal breakout line, above resistance. So here is my support right there, monthly defined support, starting to range within that. But the target is just insane. Okay, here's my less greedy target right there. Oh, I hit the breakout line. And we're not quite there yet. So now, actually, if I'm below the 12-month average, I should actually be looking for a downwards target. So this would be the implied measure move if we had a close below 1337 right there. And here would be, let me just copy that. And here it would be my bigger move. Sometimes you get that intra-action widens the formation, but there's always intermediate support levels you're going to reach, and you'll know when you reach them. When the price action bounces up, you know that was meaningful. But this is always more powerful when it's condensed. I trust most the patterns where they've been tested the most times closer to the breakout line than these further away ones. So that's how it sets up. And then there's a crazy target right here. I'm going to put it because I just want to see how greedy I could get. Top to bottom, added to the breakout line, and brings me back to these close to these all-time highs right before there was an implosion and everything went down. That's stage 4 on the monthly chart. That's the target. Right now, no man's land. We're still going to go zoom in on the weekly, see what happened. But remember now, especially that it wasn't able to go above that monthly defined resistance, it's defining it even more. So it's going to be more meaningful. The next time it breaks out above, you want to trust that. you are making lower, higher lows, higher lows, higher lows. So that's a very good sign. This, not so much. You would have liked it to stay above, but it just might need more time to consolidate. So this, you got to wait before you enter either short or long. Okay, so how did this look like on the weekly? Oh my God, it was messy. September 26. Oh, look at that. Increasing volume, gap up to the moon, weekly. Within 1 to 3 months, usually you have a pullback to the breakout line, which it did on contracting volume, except this candle right here. Okay, this one's tricky. I'm going to go to my good old trick to understand that volume, especially when you have wicks. I put in my marker, and then I'm going to zoom in and check out. Ooh, a lot of that red volume. That candle, there's still wicks. So let's give it a benefit of a doubt. And let's see, that volume, was it on? Still a lot of red volume on that red candle. A wick up. So that was a warning sign that something was up. It was trying to break out, but something immediately kept into check. Not the type of... Let me scoot that. Whoa. Zoom, 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 zoom. Yeah, red candle, hourly candle, brought the price action back down. Unable to do a follow through. Those are big warning signs, or they are warning signs. So they add up or they subtract. So if you have a lot of weight of evidence, a lot of checks. Okay, Stan Weinstein. I got the triple of volume on the breakout, horizontal breakout line. This just looks awesome right here. Above an inclining 30-week moving average, outperforming the SPX to the moon. You don't know that this is going to unfold. When you start right here, it just looks great. So I'm going to put everything in. But then you have that warning sign. And that's not the type of things you want to see. So it's having a hard time. Consult, went back down. Sideways move. Can't get above that 12-month, that monthly defined resistance. Comes back down. And really now you're below 30-week average. You shouldn't be there anymore. You should just wait it out. That's your trigger. Your timing was off. It wasn't quite the time for the stock to do its thing. You're underperforming the SPX. So all the bullish technicals to enter into a stage 2 breakout have been disappearing. This one was a warning sign. And now you're getting other warning signs by having that underperforming the SPX, going below the zero line, volume on those big red candle days. You should not, those are not signs of an uptrend. Don't pray and hope that that's going to get fixed. You should be going in a stock that doesn't behave that way, that's less volatile, that just creeps up higher and higher. So Seabridge at that moment, I don't know what the reasons were, but they entered a period of consolidation, and that's where we are today in a stage 2, 3. So definite stage 3. Can't call that a stage 4 yet. You want to, if this turns red, we could be entering stage 4, but a stage 4 with important monthly defined support right here. So you could expect bounces of that, and the monthly trend to keep that stage 4 in check, or at least make it bounce back up, and maybe bounce it back up into a stage 3. So some churning in progress for Seabridge. Definitely should not be long right now. You have these levels here. You know exactly what to wait for if you want to be long. I definitely wait for a close above 19, monthly close. And after that, this troublesome, this technical break, not the best of scenarios, that's going to be evaporated if you close above, and then your timing is going to be better, and you'll have a better ride for your buck instead of freezing some assets, freezing some capital into a stock that's moving sideways. Because remember, before going down, you have to move sideways. So you're just one step to going down. If you're going up, then you're 2 steps away before going down, right? You have to go back sideways and then down. So it's always positioning yourself on the correct angle. And right now, you're on the wrong side of that 30-week average. Definitely don't want to be long here. You want to wait until the price action goes back up. Don't pray and hope. All right, Seabridge. Let's see if it could gain some traction and move upwards. All right. Ciao, guys.